is Saviji Charji recording our weekly session for Chartsarefun. This is for the week of October 20th, recording this on Sunday, October 26th in the afternoon. Today we will talk about a couple of Barron's articles that came out, both sending contrarian signals as far as our thoughts are concerned. One was about crypto. There's been a lot of treasury companies on crypto, starting off with MicroStrategy, which is now called Strategy by Michael Saylor. So they're cautioning that the market is kind of pricing in these crypto treasury companies below their market values. If you take all their crypto holdings equated to the current market price, the market is valuing the companies lower than that. So they feel that there's risks to their the debt that they have taken on to their balance sheet, and this could lead to selling of those cryptos as the prices of crypto keep sliding. So we can talk about that article and what our thoughts are on the crypto market in general, Bitcoin, and we'll look at an alt ETF, Solana, and then talk about strategy, the MicroStrategy chart as well. Another Barron's article that came out shows extreme optimism by money managers about S&P, or for that matter, the US markets in 2026, with lower rates and with just AI-driven euphoria and momentum. Money managers are extremely bullish for yet another strong 2026. We know that last three successive years, market S&P in particular has been up north of 20%, and this year looks like it might get there. I mean, we're right now 13 to 15%, but by the end of the year, people expect that we're probably going to have definitely a positive year, may even inch out a 20% gain. So that's, and because there are many who are looking for a 7,000 target on S&P. But we'll go in there. We'll try to cover these two main topics and then kind of, wrap it up. So going back to our website, which is, of course, our blog site at Substack. It's both our charts are fun, the Substack site and YouTube. We appreciate you subscribing to these blogs. Same thing with our YouTube site, Charts Are Fun. If you like the videos, if you hit the like button and subscribe to our channel, we really appreciate that. So now the Barron's article, it talks about crypto treasury stocks facing a reckoning, warning investors that the boom could turn a bust. So that's a pretty strong word. So we thought we'll first look at the Bitcoin chart, which has had kind of a sharp sell-off all the way from higher highs hitting 126,300 early October, and in a span of less than a week, tanking down to 105,000. That 105,000 drop actually happened the day President Trump declared these 100% tariffs added to China because of the rare earth kind of posturing that China was doing aggressively against the rest of the market. So that drop from 126 to 105 was a waterfall sharp drop. Since then, it recovered quickly to 116, tested that 200 period moving average shown in red, and then from there fell back, defined new lows. But look at what's going on as these new lows are forming. Higher low and this is a 4-hour chart, 240 minutes. So higher low in RSI. That's classic positive divergence. So that 103 potentially could have formed a bottom. Since then, it recovered strongly to 114, pulled back to a higher low at 106.6 or 106.8, and tested that 114 just yesterday. Yesterday, Saturday, it tested 114. Today, so far, it's in a tight, narrow range, hovering around 114 as the high, tested 111 as the low, and then right now it's closer to the 114, 113,500. So we'll see what this does. We know that the 50 period moving average has now started curving higher. The 200 came down in the second week of October, but as we go later into October, it's kind of flattening out. So if the 50 takes over bullishly, crosses over the 200 period, if we see that RSI as it tested the 114 is actually at a higher high than the RSI when it was 114,100. So look at that RSI, look at the RSI now. That's bullish. So higher high in RSI, indicates momentum improving. And the same thing with MACD. MACD signal line, the one in black, is above the line that we saw around October 22nd or so when we saw that 114,100. So MACD climbing, RSI climbing, higher highs are bullish. And most importantly, the alternative Solana did already take out that October 22nd high. So if you hover over it, the date, as we can see, is around actually 21st, around 4 o'clock. This is the Greenwich Mean Time. So around that time, it had hit 197, and look at the latest highs as of yesterday, or kind of this morning at 199. So effectively, all have taken out a new high. Here again, the 50 period is curved, started climbing. The 200 could be basing out here, and we could get a bullish cross. Same thing here. The RSI has picked up a higher high. RSI and the MACD have picked up a higher high from that level that we saw around October 21st. So also indicating that potentially Bitcoin could go back and test its 116,000 level, and maybe from there pull back, form a nice cup and handle 103 to 116. That's roughly, say, right now, if you just even do 114, and that's a cup and handle, right? 114 from the cup, higher low at 16,800, 114. Just the measure from 103 to 114, I'm talking about 11,500. Add 11,500 to 114,001, that's 125,600, which is kind of closer to the last level here. Before from 125, it went to a higher high at 126. So that's potentially a possibility if we do see this breakout of the 200 period. And key is the Bitcoin Treasury stock MicroStrategy. It broke down from call it a broadening top with a horizontal base at 360, about 358 is where the horizontal base or support line is. It broke down from it with a rising high, so from a broadening top formation. That level from 358, or for that matter, if you take 358 to 457, that's roughly, you're talking about $199 or so. Subtract that from the 358, that gets us closer to the 260, 359, 260, 259, 260 is where that level is. So that's where the breakdown target is of the broadening top. It's kind of heading there. Lower lows is forming 292 from the low 276 recently, except the fact that there is positive divergence in this. You can see that RSI is not printing a lower low as price is printing a lower low. So we might be getting closer towards that 260 target, and from there maybe strategy could find a bottom and revert higher. So we feel that this could be a buying opportunity in strategy as it forms this positive divergence, and kind of contrarian to what Barron is talking about with the cryptos kind of having a bust cycle coming up. Perhaps that may not follow right away. We could see Bitcoin take out, maybe even take out this high at 126. So from 103 to 126, you're talking about roughly $23,000. 23 to 126 is 149. So 149, 150 is where we think potentially Bitcoin would be seeing by sometime this year. And hence we got to watch if this 103 goes to 126, forms a beautiful cup, a nice handle pullback, and then a breakout is what we would be looking for. Looking at right now, at least the test from 103 to 114 forming with a higher high in RSI, higher high in MACD, indicating a good chance that we might break out above this 200 period. Also, the altcoin Solana is already printed a higher high from October 21st, indicating that maybe Bitcoin might have a similar kind of a breakout. So now we're going to move into S&P 500 and the markets, US markets. So Barron said an article in their headline saying the bulls are back. Money managers see a strong climb into 2026. So they are painting a positive year in 2026 again. But if you look at historically, the presidential post-election year, the third year tends to be negative. So there is that part of seasonality. But so far, we know seasonality has just been proven wrong repeatedly. We had expected seasonality of pullback from August, September, and October. All 3 months were very positive, and the market keeps climbing higher highs. So the poll says investment pros expect profit growth into 26. Lower interest rates. We know that the Fed is going to be declaring rate cuts coming in next Wednesday. So that's a positive thing. Rate cuts are now expected for the next several meetings. And then AI, the momentum to drive. And they also like gold a lot, which we disagree. We feel gold has kind of hit a parabolic peak and could actually see downward momentum and decline from that parabolic peak into the next several months. So now couple of interesting tidbits on why we are getting cautious in the market and not agreeing with this money manager's view of 2026 is let's look at the percent of S&P 500 stocks that are above its 200-day moving average. This is a weekly chart going back from 2021, and we can see this sharp drop of that percent of S&P stocks above the 200 in the bear cycle, last cyclical bear cycle in 2022. And it kind of sharply dropped from the 80% down to the 12%. We got a retest of that 12% near a lower low at 10%. That happened in October. So that was the low. Since then, look at the shape of that S&P XA200 as in percent of S&P stocks. It's a dome shaped. We could have drawn a nice curve here. It's kind of hard to draw curves with this in stock charts. So we just kind of drew it through a polygonal kind of contour. But you can see that it's kind of a dome shape, a lot like how you can have a dome shaped tent, a dome shaped with climbing higher highs, and now on the other side after the peak at 86% in kind of in late March, early April, it is now declaring lower highs. So this is something for us to watch. The dome shape pattern telling us that we could be, and also this bearish cross of the 50 period going below the 200. 200 is declining, indicating that MACD is about to have this. It's already had the bearish cross, but gain momentum on the negative side as the signal line grows below the moving average line in red. So that of the MACD taking a bearish lower move, the death cross of the 50 going below the 200 and declining could lead to this kind of a drop is what we are expecting or projecting on the percent of S&P stocks above the 200. And that all usually is followed by a correction in the market. So that's what we are thinking, that we might be nearing a top in S&P. And I'll show you some reasons why we think we could be nearing a reasonably chance of a topping pattern S&P, and next year may actually be a corrective year, kind of a bear cyclical year at 20 to 25% correction. The similar kind of dome shape is also forming on the bullish percent of S&P 500 called BPSPX. This is based on bullish point and figure charts. Similar kind of a dome rose from 11% of the S&P stocks that had bullish point and figure charts in October 2022 from that bottom, 78, 80, 81, and then now it's declining on the other side from 80.8, 76, and lower highs keep forming. So we expect a drop on here as well, back towards the 10 to 11% coming up in the next few months. So we are looking at these two charts, feel there's a very, very good chance. And similar kind of bearish cross that you see here on the percent of S&P stocks above the 200 average is also on the bullish percent. You can see a bearish cross. You can see that the MACD here has already started having a bearish move and declining. The signal line is declining below the positive region to the negative region. So that and the death cross and then the dome shape pattern are all indications of lower levels in the market because of early signals from the momentum in terms of percent of stocks above the 200, which is kind of a key indicator of bearish and bullish trends. When things are above the 200, good things happen, bullish trends happen. When things get more below the 200, and that in this particular case, fewer and fewer stocks above the 200 means more and more stocks below the 200. That's a worrisome sign. So now S&P 500's chart hourly, starting on a short term, does seem to have some upside from the breakout that we saw on Friday with the CPI data that was at 3%. Market was expecting 3.1. Both headline and core came in at 3%. Month over month was 0.3. And that gave the market a gap higher. That breakout, if you form this kind of a cup from 67.64 to 65.50 to 67.52, so that's 202 points. Add 202 to 67.52 gives us 69.54. So we closed near just below 6,800. We did take out 6,800 intraday at 68.07, but closed right below it at 67.91. Unless this was a fake out breakout, which is a possibility, if this bullish cup and handle continues, that's the upside on the bullish hourly cup and handle breakout. However, if you look at the daily chart, that could turn out to be a fake out. Why? Because the daily chart shows a broadening top formation. Join the peaks of S&P in the last couple of months. As you join higher highs, the horizontal base of the support line is at 65.50. Negative divergence in RSI. S&P printing higher highs, RSI printing lower highs. That pattern of negative divergence in RSI with a broadening top here, if that breaks down from a 68 to 65.50 now, you're talking about close to 250 points subtracted from 65.60 could get us easily to 6,300. So that's a possibility of where this could turn out to be fake out of this gap-based breakout. We may not get a 69.54. The bears would say this could be at the top of that broadening top and then a breakdown, something for us to watch. On more longer term, if you look at the weekly chart of S&P going back to 2021, join the peaks and join the lows. These are parallel lines, parallel trend lines forming a channel. The lows of October 2022 and the lows that we saw in 2025 April, the trade war low, that line, first create that line by joining the lows, then a parallel line of that going up to the top, joining the January 2022 high at 48.18, the most recent highs that we saw at 6,800, you're right at the top of that trend line. So that's something for us to watch, that if you look across the channel, from this 48.18, we came to the bottom of the channel in October. We have been gradually climbing to the point where now we have testing the top of that trend line. So that's an interesting resistance level because you're testing the top of a trend line of a rising channel. However, if you draw channels over longer periods, and once a channel is drawing it all the way from the 2000 financial industry collapse, kind of a low at 666.79, join the next big low at COVID in 2020, draw a parallel line to that, joining most of the peaks since that climb from 2009. You can see that as it crosses that in 2021, because of all the stimulus that the government, the Fed, induced, and that caused it to break higher. But so you can draw two such trend lines. You can draw the trend line joining most of the peaks to the point where we tested that in late 2024, came to the test of the rising 50-month moving average near 4,900, 48.35, and then back. Now we just slightly about to cross that. So that's the other part, that this channel of joining the peaks all the way from 2009's climb, we are testing that. However, we could overshoot and we can go in and test the top end of that channel that we're showing here, and maybe hit a 72, 7,300 is what the bulls are looking for. And that's possibility. RSI is very strong at a higher high. MACD is about to climb a higher high. So that bullish momentum is there. In the next couple of months, that melt up rise could continue with the interest rates being cut, and potentially we could see that. But just have to be realizing that we are testing one end of the channel. Then three possible channels are being tested. One is this channel from the weekly chart of 2021. One is from a longer term chart from 2009. So that's almost a 16-year chart, testing the top end of that channel. And finally, a 100-year channel. This is a yearly chart. Every candle is a year. Spanning back from 1926, we can see that this has been, or 1925, this has been drawn. So in this particular chart that we can see, this 100-year chart, from the top end that we had in 2029 peak, we had a sharp drop to 4.4 into the 1932 level. And then since then, if you draw the lows, that's the channel, bottom end of the channel, and then draw the peaks, they are parallel to each other. So this peak was in 1929. Then the next peak happened in 2000, and from 2000 we got a pullback to 666. That's the 2009 pullback, and now we are right at the top of the 100-year channel. So look at that. The fact that we are at the top of the 100-year channel means that the chances of additional gains are going to be less of bigger gains, unless we completely have fundamental reasons to just break out and just break above this channel. There's a multi-100-year channel that should hold this as resistance. We feel there's a likelihood of now being at the top of that 100-year channel, less chances of additional gains, big gains in the near term. So this is where, again, we came close in 2020 recovery, but didn't quite meet the top of the channel, pullback, and then now we are hitting definitely the top of the channel. Again, how is the channel drawn? Draw the lows from the 1932 low onwards, draw a line across the lows, and then draw a parallel line extending into the line across the peaks. That's why we get a channel. Parallel trend lines on the top and the bottom. And this right now is hitting right at the top end of the channel. RSI is actually not as high as what we saw back in 2020. So a bit of a negative divergence. Look at how overbought MACD is, significantly far away from the red moving average line to the signal line. And also on an absolute value, we can see that how far the moving average is. This, by the way, the signal line is the 1226. So looking in the 12-year and the 26-year moving average, they have diverged that far away at almost 1,215 points in the S&P 500. So that is another concern. So in summary, we feel that cryptos, as much as Barron's is sending out a kind of a boom to a bust kind of a warning, we feel that cryptos perhaps could be topping out, not topping out, to break, revert to get newer highs, especially looking at the Bitcoin chart. We could from here break above 114, a measure above 103.6 to 114, measures closer towards the 125,000, 126,000, retesting that high of early October. Solana is broken up above the October 21st high already, 197 to 199. That could also break higher and retest that early October highs near 237. MicroStrategy or strategy from its broadening top is kind of closing closer and closer towards that measure target near 260. It is right now near 289, had tested 276 last Friday. So that, or last week on Wednesday. And so this is the daily chart. So this is Wednesday, Fridays, Thursday, Wednesday. So last Wednesday tested 276 in strategy. It could easily in this coming week come back test at 260. But this positive divergence, as it forms lower lows in price, kind of RSI slightly at a higher low, is an indication of potential bottoming in strategy, and we believe the strategy could also have a recovery, as much as contrary to what Barron's thinks on crypto treasury stocks. Barron's also has sent just the opposite view on the broader stock market, that bulls are back, money managers are bullish, and they expect 2026 to be a positive year. We, however, disagree. Looking at some leading indicators, the percent of stocks above the 200, in our opinion, is now beginning to form a dome-shaped top, telling us that the market is weakening in momentum. Fewer and fewer stocks are above the 200-day moving average. This could have a sharp drop towards the 10 to 15% level, indicating S&P could have a sharp drop. MACD here is beginning ready to cross lower. The 50-period moving average is beginning to cross below the 200, also a death cross. So this, with the MACD coming lower, we expect this to be a breakdown. Similar way, bullish percent index on the bullish point and figure charts, also a dome-shaped top in a lower highs, 80.8 to 76 to 76, and most recent in the 63 to 61. Now we only mustered up to 55. So imagine when S&P is climbing our highs, but two key indicators, the bullish percent and the S&P above 200, percent of S&P stocks above 200-day moving average are printing lower highs, are early warning signs of S&P nearing a major top. So this near-term hourly chart says 69.50. If the momentum continues the next week because of rate cuts, perhaps that's the level we might reach. But if you take a longer-term view, starting from a daily chart, a broadening top here could say that this was gap-based breakout, could be a fake out, and we could break down from here. And then S&P's longer-term weekly chart shows the top end of its channel, and the S&P's monthly chart also shows top end of the channel across the 16 years from 2009. And also on the yearly chart on a 100-year time frame, we are at the top end of that channel. So overall, be cautious. We are cautious in the market. We think that be very careful holding longs for the next few months. There's extreme euphoria with AI, with data center, with utility stocks, with a lot of speculative, investing going on with quantum and so on. So be careful on that. We're also cautious on gold, as much as money managers, as far as Barron's is concerned, says that gold is a lot to like about. We disagree. We think, if any, we should be careful about further upside in gold. And we shall see what happens for the next few weeks. Good luck investing. Talk to you next week. Thank you.